Check. All right. Hey, what's going on, traders? Hope you guys are doing good. This is going to be a trade review video. I'm going to review a few trades I took today, yesterday, and the day before. So that would be from Tuesday, Wednesday, Thursday. Wednesday here, there was a CPI number release. I didn't trade in the mornings on any of these 3 days. That's because my general routine has been, well, getting up later these days and trading later in the day. So I start trading typically around 2 o'clock Eastern time. Until about the near the close, which would be about 3:30. So you're going to see these trades here are pretty much from that time period. Some of these trades are on micro Nasdaq futures. Some of them are on micro S&P 500 futures, and there's not a lot of trades, so we're going to go over them one by one. And that is pretty much it, guys. So I hope you enjoyed this video. I may not go 100% totally in depth with every little aspect of why I took these trades. Again, that's pretty much impossible because, you know, a lot of what I do is semi-automated, and to literally explain every nuance probably would take about a 5-hour video. So you're not going to get that in this video, unfortunately, but I will be showing you direct entries and exits, and I'll try to give you a bit of context about, like, around how I took some of those and why I took them. So the first thing we'll do is go over to the other screen just to see, you know, context. So this was the day before the CPI number, and it was quite a slow day. There was not a lot going on, and I came and started looking at the market probably around 2 o'clock. So it would have been around here as the Nasdaq was coming down and pulling into this area, which would have been about 12,990. And you can see we held that, and it was really kind of slow activity from what I remember. It was very slow. We were bouncing off of these areas, which was sort of a demand zone, or even, well, a poor demand zone actually from this day here, which would have been August 3rd. And that held up the price for quite some time, and it bounced the price, in fact. So the first trade here was a short trade around 3 p.m. So if you just look right around 3 p.m., it would have been pretty much on this bar right here. And as you can see, well, the market was moving up. It had penetrated close to the highs of the day. Not really, actually. It basically broke this high, and it was playing with that, and we were in sort of a trading range, consolidating down. And I played a quick little short momentum trade in this area. And honestly, I think that this trade was a high probability trade, but it was, in hindsight, not really worth it. These types of trades are not really worth it, like from a momentum standpoint. So I did take this trade, but this is not a trade that I would have taken over and over and over again. It's not a trade that I take quite often, basically. And if I do take it, it's going to be on smaller size. Okay, then after that, you see the market flushed through that area. I was basically right on the entry immediately, and it did bounce off these 25s. There was a high volume node right at the 25. In reality, I wanted to target that 25 area. Because that's kind of where it bounced. There was a high node right there anyways. I didn't. I just kind of let it go. It hit there, and then it bounced back, and I was like, ah, screw that. I'm not going to let it come back on top of me. Then after that, we have a couple of long attempts here near these 33s. The reason I chose 33s, that was the upper end of my volatility range that my indicator was spitting out for me. And, well, as you can see in this case, I got stopped out both times. I'm not sure if I took full stops on each of those, but either way, we took about a 5-point loss on each one of them, 2 long attempts. And then I just waited it out. And basically the long attempts here was part of the plan. I mean, I was looking for a long. It just wasn't quite ready. They were sort of feelers, and then the market did pull back. And after this pullback and unable to stay below these 25s. Basically, it flushed below this again and then reclaimed the 25s, and I saw the way it was going up, basically on nothing. Like, all those offers are just pulling away, and I just said, all right, it's probably going to go right now. So I said, all right, I'll just get in that with a buy stop limit order, or what I use is a bid-ask quantity stop limit order. In reality, it's a limit order. I just hit into that a little bit at an aggressive price, and well, it went. I let it ride, and I did get filled on the target immediately. I actually wanted to take one off, but I ended up taking the whole thing off right there, and that was fine, actually. It was right around target area anyways, so no problem with that. Yep, so these are the only trades on the 9th for the Nasdaq here. I stopped after that, and there was one trade on the micro ES, which I'll just go ahead and go to that date time. Let's type in 11 here. It's going to go there. Okay, so then we'll go ahead and find that entry. Here it is. Okay, so here's another example of, well, the market was pretty damn slow. It was trying to get above these. It was like these poor highs at these 17 and a quarters. I sat in a short trade for a little bit, and then I just said the hell with this. I took a little bit of a, what was it, like a 5-tick loss on that. Yeah, so it did look like the market was a little bearish. We had these poor highs here around these 17 and a quarters, and basically the market was consolidating sideways, and it really looked to me like that poor high was going to hold. So I just took a short, let it play out a bit, and it was just more back and forth. It was unable to get below these 15.5s. Market was pretty slow, and then it just stopped me out for a 5-tick loss there. Volatility was pretty low. I'm not exactly sure if I had a 5-tick stop on that. I think I did, because my stops and targets adjust automatically to volatility. In this case, it looks like it was much lower, so that probably would have been the appropriate amount anyway. So that's absolutely fine, not a big deal. It did pull back, and then we saw it move higher later anyway. So that was that one trade on the micro ES. On the 10th now, there was various trades on the Nasdaq. So let's go ahead and all the way until Wednesday afternoon. So this was Wednesday morning. The market moved higher. Okay, now here, look at these entries. We're going to look at some entries here on micro Nasdaq futures and just take a look at them. So you're going to see a few break evens here, but the entries, in my opinion, were pretty spot on. So context chart for August 10th on the Nasdaq, and this was right around 2:45 p.m. So we were kind of consolidating in the center of a trading range. We were in consolidation mode, basically. The market had moved up to make a new high, and it had no follow through. That was this high right here, right before 2 o'clock. And since then, it looked like the market was consolidating. Generally speaking, I was looking for shorts because the market was consolidating after a big move up, and it just, for me, it looked like a scenario where we were going to be selling rallies more than buying pullbacks, just because of the structure and everything was just lending itself more. The probabilities seem to be a little bit more in favor of the bears for now, and judging based on where we were trading, you know, in these areas. So as you can see, we have this rally here, it fails, and then it comes back and consolidates. And these 370s was probably some sort of a high note. And again, I'm not seeing the volume profile here because I only have it set to be the current session profile, not the previous day session. Which is fine anyway. So I did take a short here, and this was a momentum short, pretty sure, 369 and a quarter. Did end up taking a break even on that one, and didn't want that to come on top of me, and then it went afterwards, which is just fine. You know, I just was a little bit early to the party, but in reality, I think I was just a little bit light-handed with that one, and I was still kind of testing the waters. One thing I want to tell you guys, very important when you're trading, you got to get used to something called testing the waters. I like to do this, which is basically like you sit there and get a feel for what the market's doing, you know, rather than just jumping in and trading it. You know, that can mean also, you know, putting a couple feelers out there, right? So I think it's very good as a futures trader to, well, as a trader in general, to be able to kind of trade a few contracts. And, you know, this will come over time. Like when I first started trading, I was always trading a one lot. And whenever I'd go to two, it'd be like a little stressful. But now having the ability to trade 2, 3, when I put on one, it's like a feeler basically. So when you put on a feeler, it's like not the end of the world. You just want to see how the market responds to that, if you're reading it right and all that. And then you can kind of manage them each one by hand basically. So yeah, definitely I would say being able to trade multiple lots is an important skill. All right, so then we have a second entry short here. Again, another momentum type of entry on the NASDAQ. And it came right back, took a 1-tick win on that. And, you know, that was pretty much it. Contextually here, again, just before 3 p.m., if we look at the chart contextually, we were pulling right back into the high noted area, right back into the value area for the day. So for me, it was really short biased. I mean, the market was pulling back into that value area to come and get the liquidity from earlier in the trading session. A lot of bulls like trying to buy the tops, or, you know, like weak bulls were getting kind of tested in this area. And that, you know, the short bias was working generally. Like I was right on the money. So we did bounce after kind of flushing through that, or I guess testing through the session VPOC. Now we're talking here after 3 p.m. And you can see here the market did bounce here and then consolidate for a while. And, you know, just because it bounced there, it doesn't mean I'm looking for longs right away. You like really the way these futures markets move, in my opinion, like there's a lot of back and forth. And really, in my opinion, I thrive from the back and forth action. So in this case, my algo got me filled on 2 short entries right here at 350 and 353. And this was my algorithm entirely, which programmed those sell orders. And I just canceled in the middle order because I do have 3 orders there. I canceled the middle one because I just wanted to take a 2 lot short. Got filled on both. The stop was actually, believe it or not, was right above here, 356. And I know it's pretty close by, but if you kind of look at the high structure here, it's poor high structures. The market was valued recently around these 344s or maybe a little lower, 343s and something from what I remember. And we saw a very quick rally up, a 3-bar quick rally like that. For me, that's a very good sort of velocity to get filled on this type of move. And I did get paid on the first contract here. And then I took a break even on the second. I'm not 100% sure if this one was my trailing stop that stopped me out or if I just cut it myself. Either way, the trade was profitable. In the second lot here, pretty much a break even on that one. The market moved higher after that, pretty much long biased until this point here, which I cannot see the time there. It is 3:30 p.m. So now if we go ahead and look at the context chart at 3:30 p.m., well, at this point, the market's making new highs. So it's tricky to judge how this is going to trade at this point. I did take a short here. This short here at 375 was a reclaimed short because the market had been moving up for quite a while. And I was scouting. I remember this one actually. And this is why it's very important to review your trades soon after you take them. So this is from yesterday. I still remember it. The S&P 500, because I watched them both at the same time. I look at the market context on both of them at the same time. The S&P 500 was into a poor high area, a supply zone, right around, it was 4.25, 4204.25, right around there on the S&P 500 futures. If you look at that time, right around 3 o'clock and something. The S&P 500 was playing with that area. We're going back and forth. And what I was looking for is if we were going to see potentially an overshoot of that area and a reclaim, I was going to go short there. But because the volatility was too low on the S&P 500 yesterday, I was trading the Nasdaq instead. So I was basically trading the Nasdaq based on a level in the S&P 500 at this point. And that was basically what got me in on this entry. So I was watching the back and forth action on the footprint as the S&P was trading around that level I was telling you about, 4204.25. And we had, there was a lot of absorption on the buy side, on the offer side, basically, which is exactly what I wanted to see. And then the market kind of continued up here in the Nasdaq for a while. And it was basically all about these 375s. And it was also something structurally with the profile at this point. There was basically sort of a step in the profile right around this 375. And there was a little high node up here, a little pocket around 13,380s. And I was either not expecting the market to go there at all, or it was going to have to go there and then eventually going to reclaim it on the downside. I would have shorted on the downside, and that's exactly what happened in this case right here. So I just shorted that on the downside here. Unfortunately, you can see I didn't take any profit on the trade, but that's basically what happened. So I entered this trade here on a sell stop, which was my typical entry, which is it's actually a limit order, but it hits into the bid when there's less than a certain amount of contracts left on the bid. Anyhow, that's basically it. I hit into that trade 375 on the reclaim as the S&P 500 was reclaiming that 04.25, hit on the Nasdaq 375 right around my area. There's a bit of back and forth. That's normal. Again, a lot of trades. One thing I've learned by watching my algo trade for me is, and this was not an algo trade, by the way. None of these were except for this one. Is the one thing I've learned is that it's very important to watch your trades, to let them play out sometimes, especially if it's a bigger picture idea. That's guaranteed. And then the second thing is, if you are looking for a measured move, you will probably need to be you're probably going to have to get you're going to have a bit of back and forth, basically is what I mean, on your entry before the market moves. And even sometimes where you enter in a very tactical location, you're still going to have some back and forth on your entry. And it could last multiple minutes before the market follows through. And then when the market starts to follow through, it's going to follow through in a way that's probably counterintuitive to try to get you to cut it faster. But you, as an experienced trader, need to know how to manage your trades properly. And this comes with experience. So again, with this one, I was discretionary about it. I hit it 375, let it ride a little bit. It couldn't really stay below these 370s. As you can see here, bounced off of 369, maybe a psychological number right there, and really didn't get anything out of it. So basically, I decided to cut this when I saw the S&P 500 had clearly reclaimed that area that I was referring to. And the Nasdaq was a little bit weaker than the S&P 500 yesterday. That is something notable as well. If you kind of were paying attention to how the price was trading, you could say different things. Like, for example, the Nasdaq, maybe it wasn't weaker because it had already made a new high, and the S&P didn't make a new high. In this very moment right here, the Nasdaq was weaker because the Nasdaq was still below that area that I was expecting it to hold, whereas the S&P 500 was now holding the level I was telling you about on the downside and bouncing off of it and now going for a new high. So, I had the chance to get out for break even on this one, but basically this is I think that this is a perfectly valid, perfectly good entry right here, and I would take this trade many times over. So basically it's a reclaim type of trade where it is reclaiming a profile step after overshooting it. Reclaiming a supply or demand zone after overshooting it, same sort of idea, and you enter on a reclaim on a momentum entry. And then after that, the market did move higher, and after that, pretty much the bulls are in full control. I mean, you break the highs on the Nasdaq like that, or actually, well, we didn't break the high of the day, but we had moved up. Everything looked pretty bullish at that point. The 15-minute chart was one time framing up, and as soon as the market was consolidating here, I put on my algo to buy, and basically this was a partial. I only got filled on a partial on this a long trade here, 81.50, and actually I had an order there, probably had an order there. I think the next order was down at 79s or 78 and something. And the stop was, well, measured move, all that. All of it's programmed to be to the volatility. And then, so basically got filled on a partial on that. Well, it turned out it looked like a bottom tick, close to it anyways. And then got filled on a target, which was right around the high of the day. And that target was an automated target. I didn't touch anything in this trade at all. I simply pressed this one button and it did everything for me. It canceled off the other order for me. Or actually what happened was it didn't get filled, and that the second order got canceled when my stop was trailing past it. So when the stop was trailing past the second order, it cancels it off. Then it goes for new highs, take it off, that's it. Get paid on the highs, and that's it. On a one lot, I mean, you have two options. Either you're going to gamble with it and you're going to try and let it ride, or you're going to get paid. I could have chose to be discretionary about it and say, okay, we're breaking the highs, probably going to see a bit of a run. Tricky call, in my opinion, but I decided to just let it play out. Sometimes what happens is because the target on the first order of my system is actually programmed to lock itself to the value of one of the study subgraphs, which is based on the volume and where the volume is trading at every price. So what happens is if the market starting to take too long to get to my target, it actually moves the target higher. And that's how it's designed. In this case, the fill was so fast that the target didn't move. It just went straight for the target, got filled, and that's it. But in the case where the market takes a longer time to get to the target, like for example, if you have volume trading higher, what happens is my system now adapts to the value area and it moves the targets higher, and that's fine. So that's a way of letting it kind of go with where the market is trading. So after that, I'm not too sure if there were any other trades. I'm pretty sure there were not. As you can see, after that, the market closed. I wasn't messing with it after that as it kind of went sideways. So I had that one long trade and that was it. Okay, so today was the 11th. Let's go ahead and start with the trades on the Nasdaq, and then we'll look at the trades on the micro S&P 500. There was two of them. I was trading both of them. The volatility on the ES today was a little low, and that's why I started off trading the Nasdaq. It was a little bit better. Volatility here was looking like it was around 7, 8, 9 points. Okay, so the first three trades here, 2:30 p.m. We'll go over here in the context chart that you guys are not seeing. So the market basically moved up this morning and failed from the highs on a daily chart resistance on the Nasdaq. That was a big area. This area here, 550s on the Nasdaq, and we pulling back from that, and like the way if you look at the structure of this, I mean, you can clearly see, okay, there's probably some liquidity stuck here, and the market's moving away from that. I mean, we have a trend down. So, I'm generally not looking to fade that, but I am looking to play some trading ranges if we have them. So these entries here, 230. So let me just make sure. Okay, so actually, no, never mind. It's all the way down here. So as the market is now approaching the value area of the prior day, this is when I was doing a bit of trading. So the market had already bounced off the value area at 2:15 p.m. and was now consolidating. This was a tricky one. This was a very tricky one, and I'll tell you why. Because generally what happens is, well, one principle, a very important principle for me, is that generally when a market bounces off of an area, like a high volume node, a session profile node, or a supplier demand zone, generally it means it's pretty weak, like it's going to get tested again. It's more likely to get tested again. And if it does get tested again, I'm not going to bet that it's going to hold, unless it's a poor area. And then we'll talk about that when we get to these next trades here, down to these 13,295s or so, because I did take a trade off of that as well. A nice one. So let's take a look. So the market moved lower, ran through the value area the prior day. This is the area right here. This was the poor low, I would call, from the prior day on the Nasdaq. It was right around that area, right around close to the value area the prior day. But it was also a poor low because that was an area that had been tested multiple times. It's not exactly that, but that was the area here. It was valid at around 1 o'clock on the prior day. So it's still quite valid. judging on the prices that we were seeing trade. Okay. So again, market goes down, rallies up, trading range. Okay, so we have some two-way action now at this point, and I had an entry long right here. That was my first entry. This was actually a pullback trade. I had turned on my buy algorithm, which bought on a pullback. Got filled on a partial on this one. Only got filled on the partial. I was looking for this to at least kind of try for above these 360s. But in fact, what happened was it was getting chopped here at these 358s. It was really just getting caught up here. There was no one willing to push this at this point. And you know, when I saw that, I was like, all right, this is a little, they're not doing it, right? So it's like when you enter, and another thing is I get filled in a partial on this. The longer it takes and it starts chopping here, and if I start seeing more offers getting taken and it can't go, like, I'm not just going to sit there and let it go back on top of me. I'm going to cut it. So I actually did end up cutting this one for a little bit less than my stop when it started to come against me here. So I just got out of that for a small loss at 351. So as you can see there's the long, there's the exit. Now, the next entry here, this one is a little bit more questionable. What I was looking for here is this. You see these lows right here, these 347s. This is poor low structure right here. And what I was looking for is the market will, in fact, already broke the low. This entry had taken place after it already broke the low of this bar. So I was looking for it to break that low, reclaim, and then I was going to play it back up to these 357s. I might have been slightly early on this one. That's the first thing. But in general, it just didn't work. It just didn't play out. They didn't hold this area like I thought they would on the reclaim, and I got stopped out. So for me, there's no big deal with that. And if I do quickly look at the S&P 500 at this time, which was 230, right around 230, it had also bounced off of a demand zone, which was 1850. It bounced right off of that. If you caught that on the first long, good for you, because I was scouting it too, but I had just missed it. Good trade if you count that bounce. But then, obviously as it's going through there again, I wouldn't bet on it again. That's over at that point. The same thing with the Nasdaq, which bounced right off of that session node, or right around the session node, reclaimed it, and now is consolidating after that. If it's going to go down and test it again, I'm not going to, try to go long on that, because there's a good chance it's going to go through it. In this case, the S&P followed through all the way down to those, through these 15s and all that. Anyways, it was quite a tough call. One thing is it's quite tricky sometimes. You have to understand that the market doesn't always offer you these good setups. Sometimes it's just kind of, sometimes they're gambling. It's like you see the poor low like that, and you're like, all right, it breaks it, fails. All right, I'm gonna try and go long, get a bit of momentum. In this case, I might have had a bit of it, and then it was like, all right, nope, stopped me out pretty soon after. Flushed after that, and that was it. No big deal. So then, market consolidates back through. This was an interesting pullback to watch. I did, in fact, think it was going to reclaim this, potentially go for some buy stops. I was just watching. I saw the way it came back in, then didn't consolidate at another time, and then I may have been looking for a short. I think I had some offers in this area, on this move right here, on this pullback up, as the market, 15-minute time frame, everything looked pretty bearish. I had some offers up here. They were not getting filled. They didn't get filled, in fact. Pretty sure the first offer was at 347. The second offer would have been around maybe a little lower, actually. Maybe the first offer would have been 344, and the second one would have been 348 or something like that. Didn't get filled on any of those, and then the market flushed through the lows. Trading 326s, we're flushing through the value area of the prior day at this point. And now I'm looking bearish. Pretty much we're pretty much bear bias at this point. It's pretty clear, there's going to be some trap longs. If you look at the structure of this, you had trap longs starting from here. It just wouldn't get them, right? And then over here, you have some trap longs here, and then over here again, you have some trap longs here. So clearly, the bears are in clear control of this market at this point. We're flushing through the value area of the prior day, and now we're consolidating here. So for me, this was a good opportunity for a short leg pullback. So as soon as I saw that flush, it's starting to trade down here. We had a decent amount of volume go through here on this micro contract. Put my algo to sell, got filled in a partial. It seems like it's a popular trend now, isn't it? Only getting filled on partials. When I'm reading the pullbacks, right, I tend to only get filled in the partials. So I'm thinking about adjusting that so that I put a little bit more size on the first leg of the position rather than having it, half of it there and half of it on the other side. But, we'll have to see over a longer sample set of trades. But I am starting to see that as a pattern, that especially on the NQ where I'm nailing those pullbacks, I tend to get filled on partials more often than getting filled on the entire thing. So yeah, anyways, we got filled on the target on that one as well. The target was there, right at the subgraph. I got filled within 2 bars like that. Very quick, swift movement straight to the target, and it filled it right away. So, I'll take that any day, because my strategy trades with price action and volatility and velocity. So, I'll take a quick fill any day right to the target rather than waiting around and, trying to bet that it's going to go for a bigger move right away. I mean, markets, they consolidate, so I'm adapted to that. I know about that, basically, that they tend to consolidate a lot more than they move for the big moves. But it's also important to make sure that you leave the possibility open for the bigger moves, and that's very important as well. That's why you can't only do that. You can't do that when you're trading only one lot. That's why I have multiple entries, but I don't always get filled on them. So, I have to make some slight adjustments, but so far things are rolling well here. Okay, let's move on and look at the last few trades. There was a couple trades on the MES. Let me just confirm at what time those were. Yeah, there was one at right before 3 p.m. and there was one near the end of the day at 3:40. So let's go ahead and look at the one on the MES first. So you can see this trade here on the Nasdaq took place at 2:45. Actually, okay, so I'll fast forward to today's action. Here are the trades on the MES for today, which was August 11th. Okay, so the market flushed down 42.08. So let me show you guys the historical chart. Historical chart, S&P 500, 42.08 is a demand zone. You see this? Okay, I was looking right at the low of this bar, which was 675s, and this area right here, 42.08s to 2.08s and a quarters, right around there. So that's the first thing. Second thing is we're flushing right to it. Boom, look at this. Just flushing straight to it. The sellers were in full control of this market. For me, that sets up a good long off of that area. So in this case, that's what we had. As it was coming down here, I wasn't convinced of any long yet. I was going to wait for it to, I wanted to let the sellers get a little tired first before, jumping on any longs here. And I had a good feeling since the 675, right the low of the bar. And again, in some videos, I tell you guys I don't use lows and highs, but I am well aware of the fact that there can often be liquidity flushes right around highs and lows of previous structural areas. That's, a given. So I will typically wait to see if they're going to flush it or if there's going to be some sort of a little stop run that takes place right around that area. Or if, the other scenario would be like it gets right to the area and we see a ton of absorption, it just like can't get through it. Or you might see multiple attempts for them to push it through and they just can't do it, and then the offers pull. It's kind of a tricky call sometimes. It's like it's not always easy to very much time it. In this case, it was not so hard to time it because it flushed straight through it. It went all the way down to 6 1/4, and really these sellers were relentless at this point, and then it really just bounced right at that point, and I was like, all right, now or never. Offers pulled, you put in the buy stop. Again, the same buy stop that I talk to you guys about all the time. It's not a stop order, it's a limit order, but it's based on bid-ask quantity relative to the amount of bids and offers that are on the book at that given moment. We're so close together. I mean, there was a good chance it was going to go for 675. So, logically, you're probably going to see some traders try to hit that and push it below to get the liquidity. In this case, they only succeeded to get it 2 ticks lower. A lot of sell orders, a lot of liquidity generally hitting that area. And just got stuck. Reclaimed the 8s, which was the area I was looking along to begin with. And I entered on a buy bid-ask quantity bid-ask quantity limit order. Got filled on 2 lots. Took a partial very quickly on this quick move up. And then I wasn't messing around with the other one. Actually, well, I didn't mess around with it at all. I just kept the stop. Stop was down here 675 or something. Because really, on a reclaim like that, you're not looking for it to come back. You're not looking for it to come back below 8 1/4, maybe a couple ticks, but not more than that. So in this case, the market did retest 8 1/4, went back and forth a couple times, and the sellers just couldn't do it. Offers pulled and went for it. So I had my offer right around the high end of my volatility range. And the market was like inching its way towards it, and I took it, and that was it. After I got filled on this, basically the second after, it just flushed a few more ticks, which is fine. You enter in your entry zones, you get paid in your target zones. Whatever happens after is irrelevant. I mean, you're not Goldman. You're here to take a piece of the move, and that's it. You ain't moving these markets. You're just making, you're taking some piece of the puzzle, piece of the pie, is what I mean. Anyhow, that's that trade, and then later on in the day here, Went for a low, came back. I wasn't really looking for much during this here. There was a bit of a poor low structure here, which was setting up a bit of a long. But there was a moment here where the market was stuck between two poor areas at once. I mean, you have these poor highs at 1150s. Then you have these poor lows at 8s. It's coming down. It can't go below 8s, going back and forth. And it's like, all right, it's like 50-50. Which one are you going to bet on? Turns out it broke the high, failed, and came back all the way on the other side. Typical. But, it wasn't a place here where I just had no idea what was going to happen. I was listening to Fat Cat talk in his Discord, and he was long. Actually, he cut the long off of these 6s and somethings, which was pretty cool. And then, he was looking for it to fall through a bit. Did fall through above the poor highs. He got something off here from what I recall. And then... he let the rest ride, and I remember the guys were like kind of distracting him in the Discord while this was happening, and it basically just came all the way back down. Realistically, I mean, you have a poor high structure breakout. You're probably not looking for it to fail that. I mean, if it comes back in and fails that, especially and you see trades go off on the offer, trades are going off on the offer, and it keeps getting pushed down like that. It's pretty much a bad sign. I would have probably taken some more off. If I was long on 6s there, I would have probably taken some more off as it came back in here. I mean, sure, it could just bounce again another time, but I feel like the probabilities are lower because you have long liquidity here that got shaken out. You got, longs that enter the market here, try to get in on a breakout. You have shorts that got shaken out is what I meant to say. Now the market failed it. And then, institutional money is not going to be holding that bid until they get this liquidity, in their pocket. It's going to be more closer to down here. That's where we're going to stop out, probably closer to the low end of the range. So tricky call there. But definitely if I was long and I saw that failed breakout, I'd probably taken some off there. A little bit more at least. Maybe not the whole thing, but I would have taken another one off. Anyways, tried for a long here on a reclaim of these 8s. It was really slow at this point. I tried for it. Volatility was low. I think it was like probably 6-7 ticks was volatility in the ES at this point. It's pretty low volatility, but that was it. And that's pretty much it. That was the trading for that. And then we saw this shenanigans action right around the market on close. And then, whatever after that doesn't matter. Let's look at the last trade here on the Nasdaq, which was the reclaim of a demand zone from the prior day. So take a look at this. So this was the area right here. So we're looking at 3 o'clock now here on Nasdaq. You have this area right here, 294.50s. The market the first time sold off right to that area, bounced right off of that area into a huge bounce all the way up to past 300, 325. And this was after just before 3 o'clock. So what that now means is that this demand zone, which was originally a green line, now turns into a red line because now it's a poor demand zone. It's still a demand zone, but it's not an area where I'm going to bet that it's going to hold a second time. Definitely not. But it might be an area where if I see a flush through it and a hold, I might bet on it on a reclaim. And that's exactly what this setup is. So what we have here is the market traded in a range for quite a while in this area. We saw a flush down, a pretty fast flush. I mean, 1, 2, 3 bars, 4 bars. Broke the lows at this moment. The S&P 500, I believe, was not making lows, was not making new lows at this point. It was kind of stuck in that trading range. That's one thing. S&Ps were still holding those 08s, so I guess that was working in the favor of it as well. So the Nasdaq flushed through those lows. I was looking for some absorption. So basically what I watched for on the tape and time and sales and the delta and all that is I'm looking for a larger amount of volume, than normal. As it is breaking this area, I want to see a lot of absorption on the bid in particular here. I want to see the sellers really try to smash this thing. So much sellers get absorbed right near the lows. A couple of attempts to push it lower because, sometimes you can get tricked into going long too early and then you get stopped on a low tick. So there was a feel aspect associated with this particular entry. So basically I had waited for it a little bit. And I guess you'd have to play it back in real time to see the exact entry of how I did it. Basically, that's what it was. It broke the low. It broke it multiple times. I think it tried at least 2-3 times to go for a new low. And then as it reclaimed that 294.50, the 295 area, that was pretty much the buy stop entry. So I got in long on 2 there. Had a bit of back and forth on this next bar here. No follow through, as you can see. And again, you always have to be willing to accept some of that back and forth on your entry. Depends on the setup. It could have also been a scenario where I got stopped out, went for a low, and then I had to re-enter it. If I was too early on the trade, that would have been the scenario. But in this case, I waited a little longer for the entry, and I did get somewhat of a precise fill after it was done, sort of stopping out, you know. Because there was some back and forth right here from what I remember. Quite a lot of it, actually, which made it look like it was a long earlier than it was a long. Anyways. So got that long, that's it, and took a partial here. That was where my indicator was telling me to get the first one. Then the market continued higher. I was moving my second target to follow along with my volatility range. Got filled at 309, and that was it. Hindsight, fine, sure. It went all the way to the other side, nearly to the other side of the range, 320s. And I was looking at that as well. I was looking at the 15-minute bars, and I was saying, well, probably the target, the ultimate target, one of the ultimate targets should be above the high of the 15-minute bar. And probably that should have been the target. But, you know, because I was running, you know, in this case, you know, you have a 1 for a 1, you have a 2 for a 1. I mean, I'm happy to take that. Maybe in the longer run of things, this scenario, this trade right here, should have been the 5 to 1 or the 4 to 1, whatever it was. Because it did end up going for that 15-minute high, and I've seen them play out a number of times where you'll get this type of setup that ends up resulting in going all the way for that 15-minute high. But that ends up being the resistance. So, I mean, I would have been sitting in this trade for another solid 30 minutes, I think, for about 30, 40 minutes before I got hit on a target above the high of the 15-minute candle. So, yeah. Anyways, that's the trades for this day, guys. Hope this video was interesting. I know we didn't have like a replay of all the trades, but, you know, tried to explain them as best as I can. Thank you for watching. Take care.